Hello everyone. Welcome to the Stock Minds web channel. Uber Technologies, NYSE Uber, delivered a strong financial performance and strategic growth in its Q2 2025 earnings. With double-digit growth across the board and robust free cash flows, the ride-hailing giant continues to flex its muscles in the mobility delivery and autonomous arenas. This performance underscores why Uber remains an attractive investment proposition, blending solid growth metrics with compelling valuation opportunities. In this video, we will dive into Uber recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Uber Technologies. Founded in 2009 by Garrett Camp and Travis Kalanick, Uber Technologies is a leading global mobility and delivery platform headquartered in San Francisco. Today, Uber operates in approximately 70 countries across thousands of cities, offering ride-hailing, food delivery, freight services, and local logistics. With over 180 million monthly active users and millions of drivers and delivery partners, Uber has become a cornerstone of the super app model, integrating rides, food, and more under one digital roof. Uber financial performance. In Q2 2025, Uber Technologies delivered another strong financial performance, demonstrating robust growth and improving profitability across key metrics. The company reported revenue of $12.65 billion, an 18.23% increase compared to $10.7 billion in Q2 2024, while earnings per share (EPS) rose to 63 cents, up 35.5% from 47 cents a year earlier. On a trailing 12-month TTM basis, revenue reached $47.33 billion, reflecting an 18.15% year-over-year increase from $40.06 billion. Even more impressive, EPS TTM surged to $5.89 compared to just 91 cents in the prior year, marking an extraordinary 545.1% growth. Uber also delivered strong cash generation, with free cash flow per share (TTM) rising to $4, up 79.37% from $2.23 in Q2 2024. Profitability remained solid, supported by a gross profit margin of 33.93%, a net profit margin of 26.68%, and a free cash flow margin of 18.04%. The company's efficiency metrics were equally impressive, with a return on assets of 5.78% and a return on equity of 67.48%, while maintaining a healthy debt-to-equity ratio of 0.52. Over the past 5 years, Uber has transitioned from an unprofitable company into a profitable one. Uber's revenue has grown at a 37% CAGR, while net income and free cash flow turned positive in 2023 and are continuing to grow at a double-digit rate. Uber Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $51.48 billion, representing a 17.06% growth from $43.98 billion in 2024, and expect 2025 EPS to reach $2.91, down 36.19% compared to $4.56 last year. Reflecting strong market confidence, Wall Street analysts have assigned a buy rating to Uber's stock, with a consensus price target of $106.33, implying an upside potential of 11.74%, while the highest price target of $150 signals a possible 41.07% upside from current levels. Uber stock price performance and valuation. At the time this video was created, the stock was trading at $95.16 per share. Uber has delivered a strong stock performance, rising 31% over the past year and significantly outperforming the S&P 500, which gained 14.57% during the same period. Looking at a longer horizon, Uber's stock has surged 181.5% over the past 5 years, more than doubling the S&P 500's 83.2% gain in that time frame. In terms of valuation, Uber remains reasonably priced relative to its growth potential, with a price-to-sales PS ratio of 4.29 on a trailing 12-month TTM basis and a forward PS ratio of 3.92. The company's price-to-earnings PE ratio stands at 16.44 TTM, while the forward PE ratio is 33.26. Additionally, Uber's price-to-free cash flow (PFCF) ratio is 23.24. If we look at the valuation since 2023, the forward PS is above the average, while the forward PE and PFCF are below the average. Although the decline in PE and PFCF is normal for a company transitioning to profitability, its forward PE and PFCF remain reasonable compared to its growth rate. Uber growth potential. Uber growth prospect remains robust, driven by several factors. 1. Delivery segment expansion and market diversification. Uber's delivery segment achieved remarkable 25% revenue growth to $4.1 billion in Q2 2025, with adjusted EBITDA surging 48%. The segment's resilience reflects structural changes in consumer behavior post-pandemic, with gross bookings growing 20% year-over-year to $21.7 billion. Strategic partnerships expand Uber's addressable market beyond traditional restaurant delivery, including collaborations with Dollar General for household essentials across 14,000-plus locations and Costco for warehouse delivery targeting affluent suburban consumers. The pivot from restaurants and groceries has turbocharged growth, while cross-platform activity between Uber Rides and Uber Eats amplifies engagement. International expansion continues through acquisitions like the pending $950 million purchase of Delivery Hero's Foodpanda operations in Taiwan, cementing Uber's foothold in high-growth Asian markets. The delivery ecosystem benefits from network effects where increased restaurant selection and faster delivery times attract more consumers, creating a virtuous growth cycle. 2. Autonomous vehicle ecosystem integration and strategic partnerships. Uber's strategic approach to autonomous vehicles represents a transformative growth catalyst without the capital-intensive burden of developing proprietary technology. The company has established partnerships with 20 autonomous vehicle partners globally, including strategic alliances with Waymo, Baidu, WeRide, and Lucid Neuro for next-generation robotaxi services. These partnerships enable Uber to leverage its platform scale while autonomous partners provide the technology, creating an asset-light model that minimizes R&D costs. The collaboration with Baidu will deploy thousands of Apollo Go vehicles across Asia and the Middle East, while the Lucid Neuro partnership aims to introduce 20,000 autonomous vehicles over 6 years with multi-hundred-million-dollar investments. This strategy positions Uber to capture significant value from the autonomous mobility market, projected to exceed $200 billion by 2035, while maintaining its role as the dominant platform aggregator. 3. Geographic expansion and suburban market penetration. Uber's strategic expansion into suburban and international markets represents a substantial growth opportunity with higher profitability potential than dense urban areas. Approximately 20% of Uber's rides now occur in sparser markets, with growth rates exceeding dense city markets, as suburban trips often generate higher margins due to longer distances and premium pricing tolerance. The global ride-hailing market is projected to grow at 15.1% CAGR from 2025 to 2035, with Uber's presence in over 10,000 cities providing extensive expansion runway. International markets offer particular promise, with partnerships like WeRide expanding autonomous services to 15 additional cities across Europe and other regions over 5 years. Suburban penetration leverages partnerships with retailers like Costco and Instacart to serve more affluent customers who typically purchase larger orders and tip more generously. While suburban expansion faces challenges including longer driver response times and higher car ownership rates, Uber's data-driven demand forecasting and dynamic pricing algorithms optimize service availability and profitability across diverse geographic markets. Risks to consider. While Uber presents an attractive investment opportunity, we should be mindful of potential risks. 1. Intense competition. Uber faces intense competition in ride-sharing, delivery, and emerging segments, which may trigger price wars, increase marketing costs, and reduce market share, affecting profitability. Major rivals include Lyft in the US, DoorDash in delivery, Bolt in Europe and Africa, regional challengers like Didi and Grab, and emerging robotaxi companies such as Waymo and Tesla, all vying for dominance across global markets in 2025. 2. Technological disruption and robotaxi competition. Emerging self-driving car technology and robotaxi services from companies like Waymo and Tesla pose a significant long-term threat to Uber's traditional ride-sharing model. While Uber partners with some robotaxi firms, including Waymo, to integrate autonomous vehicles into its platform, this competitive landscape adds uncertainty to Uber's future dominance in mobility, as robotaxis offer potential cost reductions and operational advantages. 3. Regulatory challenges. Legal disputes over whether Uber drivers should be classified as employees or independent contractors pose ongoing risks to the company. These debates could lead to higher operating costs and force changes in Uber's business model. Additionally, varying data privacy, transportation regulations, and labor laws across jurisdictions create continual compliance challenges and uncertainties for Uber's operations worldwide. Conclusion: Uber Technologies has demonstrated exceptional performance in Q2 2025, driven by strong revenue growth, soaring profitability, and robust free cash flow. With a 31% stock gain in the past year and an impressive 181.5% rise over 5 years, Uber continues to outperform the broader market. Supported by solid financials, reasonable valuations, and optimistic analyst forecasts, Uber remains well-positioned for long-term growth. Despite certain risks, its expanding business model and strategic investments make Uber stock an attractive buy opportunity. But remember, this is not a financial advice. What do you think about Uber? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.